The financial world just got a jolt. Moody's, a top credit rating agency, downgraded the United States. News like this always grabs attention. The U.S. government's debt is considered the world's safest asset, so any change is a big deal. Investors and analysts immediately start asking, what does this mean for the economy, for my investments, for the future? Volatility spikes, headlines swirl, and everyone's watching for the next move. But this isn't just about numbers. It's about trust in the world's largest economy. Moody's decision forces a reevaluation of what we consider safe. For those in the crypto space, it's a reminder of the differences between traditional finance and decentralized alternatives. The downgrade is more than a headline. It's a signal that the financial landscape is shifting. It's a moment that will be analyzed for months, raising questions about the future of money and stability. Instead of getting lost in the noise, let's break down what this really means. How does this compare to past events? What's the bigger picture? For Bitcoin and digital assets, these moments highlight why alternatives exist. The Moody's move is a data point in a rapidly changing world. Let's dig into the implications for Wall Street, Main Street, and the digital frontier. A credit downgrade is like a report card for a country's ability to pay its debts. Agencies like Moody's look at debt levels, political stability, and economic growth. When they downgrade, it means they see more risk, even if it's still small. The U.S. has long held the top rating, so any slip is significant. Moody's cited rising national debt and political gridlock as key reasons. When lawmakers can't agree on budgets or debt ceilings, uncertainty grows. This isn't the first time. S&P downgraded the U.S. in 2011. Fitch did it in 2023. Each downgrade adds to a narrative of mounting fiscal pressure. The U.S. hasn't defaulted, but agencies are flagging future risks. It's not just about numbers. It's about the direction things are heading. The message: the world's leading economy faces real growing challenges. Understanding these trends is crucial for anyone watching global markets. A U.S. credit downgrade sounds alarming, but it's not the end of the world. The U.S. economy is still massive, innovative, and the dollar remains the world's reserve currency. Even after the downgrade, U.S. debt is still considered high quality. Most big investors can still hold U.S. bonds without issue. The downgrade reflects long-term concerns, not an immediate crisis. Markets have seen this before. S&P and Fitch already made similar moves. Much of the risk was already priced in. The U.S. has unique strengths, deep financial markets, and a powerful central bank. This is a yellow flag, not a red one. The real story is about long-term fiscal management, not imminent collapse. Stay focused on the fundamentals, not the panic. The sky isn't falling, just shifting. Big news like a downgrade sparks volatility, stocks dip, bond yields move, currencies react. But these swings are often short-lived, driven by algorithms and emotion. Many experts saw this coming. Fitch and S&P had already downgraded the U.S. The fiscal issues Moody's cited aren't new, they're ongoing. Much of the market had already priced in the risk. For some investors, volatility means opportunity. When fear drives prices down, long-term thinkers look for bargains. If the U.S. economy's fundamentals are strong, dips can be buying opportunities. Crypto markets react too, sometimes selling off, sometimes gaining attention as alternatives. When trust in government debt wavers, assets like Bitcoin get a closer look. These moments can shift the narrative toward digital assets. Volatility isn't just risk, it's also potential. A U.S. credit downgrade always sparks talk of alternatives, especially Bitcoin. Born from the 2008 crisis, Bitcoin was designed as a decentralized, scarce asset. Its supply is capped, and no central bank can print more. In times of fiscal uncertainty, Bitcoin's predictability stands out. The downgrade isn't a crisis, but it highlights why people look for alternatives. Regulatory clarity in the U.S. could boost Bitcoin's appeal even more. Clear rules mean more legitimacy and safety for investors. Each time trust in traditional finance is questioned, Bitcoin's value proposition shines brighter. It's not about collapse, but about the growing appeal of a parallel system. As challenges mount for old systems, digital scarcity becomes more compelling. The shift is slow, but every event adds momentum. Bitcoin's story grows with each shakeup in traditional finance. Financial leaders like Michael Saylor and Anthony Scaramucci see Bitcoin as a hedge against inflation and instability. They argue that digital scarcity and independence make it a powerful store of value. Bitcoin ETFs and institutional interests are bringing it into the mainstream. As Bitcoin integrates with traditional finance, its legitimacy grows. The Moody's downgrade isn't a reason to panic, it's a chance to reassess. Volatility and change are constants in markets. Use these moments to learn and make informed decisions. Are you prepared for a world where old assumptions are challenged? Consider how digital assets might fit into your strategy. The news cycle will always bring new headlines. The key is to look past the noise and focus on the big shifts. The future belongs to those who adapt and plan ahead.